Welcome back. I'm now joined by our business editor, Owen Fairclough. Hello again, Owen. Now, Greece is continuing to dominate the financial agenda, and you've picked up on a significant change in language by key EU leaders.
Yeah, absolutely, Clay. It wasn't so long ago that it was almost an unwritten law of the EU that you did not talk about the disintegration of Greece. You certainly didn't talk about Greece exiting the euro or indeed leaving the EU altogether. Not anymore. Key EU leaders who could well decide the fate of Greece in amongst this political turmoil are beginning to break cover and talk this country down seriously. And it's a small but very significant change in position, as Siobhan Silk reports.
Up to now, European leaders have been reluctant to be drawn on Greece's future in the Eurozone. In February, European Commission President Jose Manuel Barroso would only say he wanted Greece to stay in the euro. But now German Finance Minister Wolfgang Schäuble is beginning to sound more resigned to the possibility of an exit.
If Greece does not decide to stay in the Eurozone, then we can't force it to stay in.
Neither will it be forced out. The German government says it will continue to show solidarity with Greece as long as it fulfills its commitments. But after last week's election, anti-bailout, anti-austerity parties are the biggest political force in Greece. The disparate parties have failed to form a coalition. Now a political crisis is brewing. European leaders are keeping a close eye on the deadlock.
The current situation is extremely fragile and extremely dangerous, because now it depends basically on whether a reasonable coalition government will be able to form in Greece or not. If not, then the consequences would be really horrible for Greece and perhaps for the rest of the euro area.
After 2 years of austerity, Greece is in deep recession and unemployment is at a record 21%. Schäuble insists the country must stay the course of austerity, but some German lawmakers are taking a different tack, saying Greece should be offered a controlled exit from the Eurozone without being made to withdraw from the EU.
So plenty of woe there, Claire, that's obviously infected the markets for the last couple of weeks or so. And so it continues this Thursday here on the Asian markets, at least. The Nikkei briefly dropping below that all-important 9,000 point threshold. Has managed to creep back up, but still you can see very flat, as is the Shanghai Composite, where in China we've seen their exports and imports both down in the latest trade figures. Having said all that, there's lots going on the Asian markets today. We're expecting Sony's results out any minute, Hitachi as well, and TEPCO, worth noting. That's the power company at the centre of the Fukushima disaster last year. Its share price shot up 16% after the government completed a takeover. Just while we're talking earnings as well, one or two out already in the past few hours that I've picked out for you. A surprise loss for Singapore Airlines, one of the world's best performing airlines, has been over the last few years, actually turned a loss in its latest results of 38 million Singapore dollars. Zurich Insurance, though, good first quarter for them. Their profits up nearly 80%. Many of these European insurers had a very difficult 2011 after the Fukushima disaster, as you can imagine, paying out big money for damages, now beginning to get back in the game a little bit.
Now let's talk about the euro. We've seen it dip below a key threshold, but overall, the single currency has actually held up pretty well.
Yeah, for many people, this is one of the big mysteries of the last couple of years. You'd expect with this Greek crisis, with all this European sovereign debt crisis, the euro to have gone through the floor, maybe even gone to parity with the dollar. And yet it's actually held up pretty well over the past couple of years. OK, in the last 24 hours, it has dipped below $1.30 off the back of all these concerns about Greece. And you can see, though, it has been lower than that this year. In January, it dipped as low as 126. OK, it's been higher than that over the past 12 months. You can see during last summer, before this whole Greek crisis really kicked off, it was trading at around 145. But that's actually a pretty good range. It's really held its head above the water when you consider all the negative news flow. Very difficult for foreign exchange traders. This is their bread and butter. They love the volatility. They love trading off these kind of things. But they've been left twiddling their thumbs a little bit over the past 12 months because it's been the dollar and the euro has been pretty stable.
So the European Central Bank has to be given some credit for that, and it doesn't get a lot.
It doesn't get a lot of credit, Claire. It's always getting a bashing for not doing enough, not stepping in to buy enough bonds for countries like Spain and Italy, of course, under pressure from the French to actually start printing money and try and help the Eurozone a little bit. But this, you might say, is one of its quiet victories, and it's something the ECB always remind you of when you go to Frankfurt. They always lecture you about maintaining price stability, keeping inflation down. And it's things like this they've managed to achieve that have helped the euro stay the course against the dollar. They won't get a lot of credit for it, but maybe when the history books are written, they might get a retrospective appraisal.
All right, Owen, let's now pick up on a few more business headlines. Spain has completed its partial takeover of Bankia, considered its most vulnerable bank. The government has taken a 45% stake in the firm by converting nearly €5 billion of state aid into ordinary shares. Ministers said the move was a necessary first step to guarantee Bankia's solvency. It struggled since taking over several regional banks, which were heavily exposed to the property crash.
Rupert Murdoch's family have further entrenched their position in News Corp by doubling their share buyback. News Corp announced it's repurchasing $10 billion of stock. That's double the amount announced last summer amid questions about the company's leadership in the wake of the UK phone hacking scandal. The announcement was made as the company beat estimates to record a 47% rise in third quarter earnings.
And Industrial and Commercial Bank of China has become the first Chinese firm allowed to buy a US lender. ICBC was cleared to take over the American subsidiary of Bank of East Asia. It's the latest sign of improved trade relations between China and the US, following years of disputes over currency and trade protectionism.
OK, it's time to talk a bit of football here on the Business Show now. Rip-off prices, boycotts by key EU leaders over the treatment of jailed opposition leader Yulia Tymoshenko. Ukraine has had a pretty disastrous start to Euro 2012, and a ball hasn't even been kicked in that tournament. But over the border in Poland, it's a very different story for the co-hosts. One of Europe's few growth stories of recent years is showing us why the beautiful game has been turning some very, very nice-looking figures for the Polish economy.
This is what the site of the Polish National Stadium looked like back in 2007, the year that European football's governing body UEFA picked Poland and Ukraine to host Euro 2012. And here it is 5 years later. It's a fitting symbol of the transformation the country has seen since it won the race to stage the sporting showcase.
5 years have gone by since we were awarded Euro 2012. But when you look at the investment projects we've put in place, you'd think it was 7 or 8 years.
Euro 2012 kicks off on June the 8th in the brand new National Stadium in Warsaw, built for the equivalent of €450 million. But the Polish capital isn't the only city to have benefited from Euro 2012, with tournament-related projects enabling Poland to tap funds from the European Union. Gdansk, for example, boasts not only a new stadium, but also new tram lines and a ring road. The price tag there has been around €1.2 billion.
If we hadn't had the European Championships, we wouldn't have been able to achieve half of what we've done. Before 2007, the spending plan had been €600 million.
Fans are expected to spend €180 million here during the tournament, but Poland is looking to tap the benefits well beyond that. The country has been the only member of the 27-nation EU to keep growing during the economic crisis.
We estimate that the Euro 2012 factor will add around 2% to Poland's GDP up to 2020.
Most of Poland's Euro 2012 linked projects are not directly sport-related. Only 4% of spending going on the 4 stadiums, for example. When the final whistle blows in July, dozens of other projects, notably a highway programme, will still need to be finished.
I know, and you're a big fan of the beautiful game yourself. You're heading to Ukraine soon?
I am heading to Ukraine to follow England, yeah, but I have to say, with all that going on, all that political turmoil, you had Michel Platini, the head of UEFA, blasting Ukraine for too high hotel prices. They really do need to get their act together, and the contrast couldn't be greater. Poland have sold all their allocation for all their group stage games. They're hosting teams like Spain, the current world champions. Different story in Ukraine altogether. There are tens of thousands of tickets still available, partly because many fans have simply been driven away by the infrastructure problems and the fact that they just don't think that Ukraine can deliver on this tournament.
All right. Thank you very much for the business, and thank you for watching. Stay tuned to France 24.